Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So we are continuing our conversation on what does it mean closing the books. And one thing that I've seen a lot is that organizations not understanding cash versus accrual basis. So there's many tasks that can actually get you into the accrual basis instead of cash basis. For the most part, most small businesses, smaller nonprofits, they're operating on the cash basis. However, do you know there are specific tasks that you can do in your accounting software that is actually accrual basis? So let me show you a couple examples. So, first of all, cash basis, accrual basis. What is the definition? Cash basis is revenues and expenses are not recognized on your books until money is exchanged. So that means when you receive that money or you actually pay out that money, that's when it's recorded on your books. Accrual basis is when revenue and expenses are recognized. Money has not been exchanged, but they are just recognized on your books. So let's look at an example. If you're using an accounting software, say you're using QuickBooks, if you create a invoice, you're actually doing accrual accounting. Many organizations do not realize that. And why is that accrual accounting? Because in QuickBooks, they are recording an accounts receivable, a receivable, which is on the balance sheet. That is money owed to the business or even to the nonprofit. And it also records revenue. So in accounting, there's entry is always two-sided. So you always have a debit and a credit. So if you look here on the right-hand side, that accounting entry, it increases accounts receivable, that's money owed, and it increases revenue. So once again, this is when you create an invoice. If you create a bill in QuickBooks, where if you're entering in all your bills into QuickBooks, QuickBooks records an accounts payable that is money owed to someone else, and it records the expense. So if you order from your supplier and they send you the bill, you enter that bill into QuickBooks, it records the accounts payable and it increases expense. As you can see, I have not mentioned the word cash or bank account in any of these two examples. That is accrual basis. No cash has been exchanged. No cash has been deposited. No cash has been taken out. Accrual basis is just recording the transactions, just recording revenue and expenses. So if you look at, take for instance, our personal life, it would be great for us just to record our bills and not have to pay them until we actually feel like it, just using it as an example. So accrual basis works in that same type of way. So you want to make sure when you're closing the books, you're understanding what transactions are occurring. And then also, what financial reports are you looking at? Are you looking at cash basis? Or are you looking at accrual basis? So if you need help understanding your financial reports, email us to set up a free consultation so you can make better decisions. Hopefully, you find this information helpful. Make sure you comment, like, and share, and we'll see you next time.